Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Too bad. Let me show my screen here and we can kick this event off here. Yeah, I hope everybody enjoyed the long weekend and possibly, for those that have portfolios, a little bit of a run up into the long weekend. That's a pretty historic phenomenon, actually. The market seems to have a lot of expectancy or relief or excitement that they get a rest, they get an extra day. So it's typical to see the markets want to rally in front of a long weekend. I always thought that was funny because, you actually then expand the risk element over the weekend, with geopolitical risks and all that kind of stuff. And in this case, there was, except that it kind of bottomed already at midweek, right? We bottomed in Wednesday. And then it was like, there was little glimmers of, maybe there will be some resolve. They seem to be moving a little bit closer to the middle. Biden, that was just basically kind of on the no side, was, sounded like there was a little bit more negotiation or hope of that happening. So I think the markets, rallied in anticipation that this would get done. And we're still not there completely. We have to obviously have the vote. But the latest news that's coming out is basically, I'll just read it here. Where did it go? Well, it's disappeared on me. But the latest news is, yeah, here it is. I got it now. Stock futures rise after GOP and White House reach tentative U.S. debt ceiling deal. So tentative. It's going to be voted on sometime this week and hopefully before the 5th of June. So we still don't know, whether it would get locked completely and what it all means, but this was what the market was anticipating, that something would occur. There were indications of that by McCarthy, that things were starting to move along. So markets like that. But I mean, there was lots of other catalysts as well, right? So what did we have for catalysts? We had NVIDIA's earnings, right? So we hit a low on Wednesday in the market. Like we opened kind of up a little bit on Monday. We pulled back Wednesday, we hit a low. And then we had the NVIDIA earnings, which gapped the market. Free market was really strong. And of course, on Thursday, the S&P didn't follow through as much. I mean, it kind of closed a little bit above where it opened, but not that much. The Qs were much stronger and have been all year, in fact. And then the Russell didn't like what was going on Thursday for some reason. It went the other way. Dow Jones kind of a little bit soft as well. But then on Friday, Russell decided to not be left behind and wanted to kick it in too. And, we had a continuation of a rally. In fact, the signal to noise ratio on Friday for the S&P was much better than Thursday. And for the Qs was just, really strong signal to noise. And what I mean by signal to noise is very steady move upward with very slight pullback, walking the upper Bollinger Band. So I call that signal. And it's not volatility, it's not chop, it's the opposite of that. So if you want to know what noise is, just look at something like what looks like an earthquake sign, just chop, 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 back and forth. If you want good signal, that would be very directional with very low volatility and consistent move in that direction. Could be down, could be high signal down, or could be high signal up. So this on the screen here is the sector performance for the week. We see technology, again, NVIDIA. And then on Friday, we had Marvel earnings. So that added, I mean, that thing was up 35.5% or something. Incredible move and driving all the semiconductors. So we'll take a look at the SOX and SMH ETF charts before we finish here as well today. But yeah, the technology, came in number one, and discretionary, which is consumer cyclical, came in number two for the day. And for the week, the cyclical was in third place, but still much better than the rest of the groups there below it. So you can see that on Friday, healthcare and energy and utilities were lagging, consumer defensive as well. And look at that for the week. They just got pounded. So even though we pulled back on Wednesday, had that discount and the concerns about the debt ceiling and things were not going so good, and we were also getting more information about the economic reports were pretty robust, and they indicated that the Fed may not pause in June. In fact, there was a lot of Fed speak this week as well. Same thing. It's more like, well, we're going to still have to do some more hikes, and we probably won't be able to cut interest rates until the latter, maybe late into 2024. If you guys are expecting that, it's probably not going to happen anytime before that. So kind of buckle up and prepare for a little bit more hikes. And we don't know if we're going to pause, but we might. But we don't know. We're data driven, blah blah blah, right? So that was what was the headwinds that we had for the first part of the week. And then it started to shift a little bit again because I mentioned the debt ceiling stuff. And then the NVIDIA earnings, a massive catalyst. And of course, everybody's into this AI all over the place. And then Marvel earnings and some other stronger economic, which means the economy's fine. So on Friday, they kind of shrugged off the rate hike thing. It was more about the strength of the economy. So that's where we find ourselves. And this snapshot here shows it very dramatically, the haves and the have-nots. Basic materials were down because the U.S. dollar did kind of move up for the week, and I'm sure people had questions like, why is the U.S. dollar moving up when we're talking about debt default? Well, there was a lot of scare tactics about this debt default, but we've had government shutdowns before, many of them, in fact, some even under Trump administration. We've had a situation where employees have been furloughed and blah blah blah. So I mean, yeah, there's concerns, but the hype is always more. The media drives things, blah blah blah. So there was probably overly impacting the market with the fear element, and the dollar, it has been the flight to quality, defensive. And I guess from a contrarian takeaway, when I heard the questions come up about why is the U.S. dollar rallying, I thought, well, maybe if they can't spend as much as they want to, the dollar is going to go up. Maybe if they can't add another $1.5 trillion in debt, maybe the dollar should go up. So I could see a case for it. Things are sometimes the inverse of what you would naturally think, like things are counterintuitive rather than always intuitive, right? So that's where we find ourselves there. Let's go to the next slide here. And these are the ETF performances for, well, really the week, the month, the quarter, a full year, full 12 months, and also then year to date. So you can see how incredible year to date already for XLK, up 32.42%, Qs up 30.84%, SPY is lagging that, up 9.83%, discretionary, which includes Tesla in there, 17.66 for year to date. And then look at the have-nots, the healthcare down, utilities just getting crushed. I mean, look at that spread from XLK to utilities, XLU. I talk about people being able to take advantage of money flow and relative performance between two instruments. These are the kind of things where if you put some XLK and we're short XLU, you get that massive move separation. It's not always easy to do, but there are some incredible inflection points where that can be done. And you're going to be faced with a situation where you're either really right or really wrong. I mean, because you're taking two instruments that tend to separate most of the time. And now there can be mean reversion, as we've seen. Last year, what did better, the diamonds or the Qs? Well, the diamonds. What are the diamonds made of? The Dow 30, more defensive, blue chip, right? And also, it's not a market cap weighted, it's a price weighted ETF. So it has different construction anyway. But now you see that the Qs are coming and dominating this year, and the diamonds are, pulled back or not participating as much at all, really. So that in and of itself is mean reversion. Qs were down 31% last year. Now they're up 30% already this year. So it's what we call mean reversion. We look for that. We look for the dogs of the Dow, or dogs to maybe be picked back up, tax loss selling, things like that. We talked a lot about that in other meetings since the beginning of the year, and that theme is continuing. And we do see some desire for risk on. So looking at these ETF performance here, it's kind of a eye opener. If you haven't already been participating in them and you're just now seeing this, kind of like staring at it for the first time, it is kind of an eye opener, right? So let's move to the next slide here. So Dave, I'll let you talk about what you see on this. This is the ETF dashboard for the last day of May.
Yeah, that's going to be on Wednesday, and it tends to be a down day, that's the normal deleveraging that happens. But within that, we see that gold might be a little bit more bullish, and oil a little bit softer, as well as retail and financials. So, like most months, the final day looks to be a down day, and within that,
like 9 out of 12, I've analyzed it, right? So,
but June is actually opposite. The final day for June is actually up. So May is a classic, like a typical month. So yeah.
Well, I think there's a reason, Dave, for June to be a little bit opposite, and that is you've just had the Russell rebalancing, and so there's been this process. You're at the end of the quarter. You're at the end of the semester, and you have July 4th kind of coming up, and we often have peaks. The market kind of peaks around that week, July 4th weekend. We've seen that over history many times. Sometimes we can have a summer rally. It all depends on what's happened prior to that. But there can be a good reason why June does not have the last day of the month down.
And on the last day of the month for this month, the Qs would outperform the spider typically. So a little more strength in tech, but your classic S&P 500 stuff a little bit weaker for this.
Yeah, here's the Qs here. Here's the Qs for the last day of May, right? You can see that they're not bad. I mean, the SPY is a little bit worse. I mean, this has been the theme all through the year so far, as the Qs have been outperforming the SPY, and they have done that in May. So in keeping with what was shown, we saw that actually play out. And remember, we said we were suspicious about the sell in May and go away, that because it was so broadcast ahead of May, that we were like, the market likes to prove the most people wrong most of the time. And anyway, so it ended up, being not a bad month, especially for the Qs. So let's go to the next slide. And this is the first day of June. So this week you get the benefit of not only the last day of the month, so there's some activity there, and you get the benefit of the first day of the month. So you actually have a turn of the month effect. So what do we see here, Dave?
Yeah, so on that first day, it's not a really robust day typically. The spider's up 0.18%, with a couple sectors such as oil and gold a little bit stronger, and even basic materials. So it's not a giant day. Most of the month's return comes from the middle of the month, that mid-month seasonality. So it's kind of a light first day. And the first Friday is actually more robust than the first day of June.
We have that on the next slide here, at least for the Qs. So, oil got punished a bit on this last Friday. And so there may be a case for it bouncing back here a little bit. So this is the Qs for June, and he was talking about the first Friday here. performing better even than the first trading day of the month. So not a spectacular turn of the month effect, because let's go back here. So the last trading day of May is not bad, and then the first trading day of June is not spectacular. So really not a great turn of the month effect, but gets better for first Friday and mid-month seasonality. And then expiration. If you remember last year, the third Friday of June expiration was a low, and it was the turning. Remember, it was the turning point. We started to turn after that, and then we entered the summer rally.
Mm-hmm. Yeah.
So that's interesting there. And this is what you were saying about the last trading day of the month being positive, which is rare, because that's only 3 or 4 of the 12 months a year that you see that.
Correct.
Okay, let's moving on here. Interestingly enough, this top 10 list here was February 15th, 2023. But look at these stocks for a minute. Tesla, and of course the SPY, Amazon, Apple, Nvidia, Hughes, Alphabet, Google, AMD, Meta, Microsoft. So it's probable that AMD slipped a bit, but Nvidia certainly rose this last week up this. But this has been interesting because this is like amongst all broker dealers that deal with retail traders and investors. These are the top stocks that were published February 15th. And it's still pretty much the same, meaning these are very crowded trades. So when you're looking for a potential reversal or something like that, or go with, if you're trading relative strength, or you're looking for pairs, these are the ones that have the most public opinion and participation. And like what just happened with Nvidia, it's lifted a bunch of semiconductors with it as well, right?
Mm-hmm.
So why don't we do this, Dave? Let me see what else I got here. That's the last of these slides. Why don't you rattle off the economic reports for the week and any earnings, and then I'll circle back with a few charts and what the futures are doing and stuff like that.
Yeah, so on Tuesday, we have some housing data. It's the S&P Case-Shiller Index, and the Richmond Fed Barkin is speaking, so a little Fed speak, consumer confidence, and some house data. Wednesday, we have some employment news, ADP employment report, and job openings. Thursday, initial jobless claims, some manufacturing data, the manufacturing PMI, and construction spending. And then Friday is a big one. It's usually the U.S. employment report. So the themes for the week will be employment, housing, manufacturing. So it's going to give some more color as to how employment's holding up and if manufacturing is slowing down. And then we also have a couple earnings. Tuesday, just a couple like Bucks, Ambarella, Hewlett Packard. And Wednesday's a big one, Salesforce, CRM. Then there's some other ones, Okta, Nordstrom, C3 AI. That's another AI stock.
Right.
And Thursday we have Broadcom, some more chips. And at Lululemon, that can show how the middle high-end consumer is holding up. Things like LVMH have been really strong, Ferrari. So the super high-end's been holding up really well. But this will give you that kind of upper middle class consumer, if they're getting hurt by the inflation and fear of recession. And then things like Dell, Dollar General, Five Below, and Friday, not too much. So between Tuesday through Thursday, just a smattering of earnings. Still going to give us some color as to how the consumer's holding up.
Okay. I like it. So some good stuff to happen this week here. What day is the next Fed meeting? Is it the 14th, the 13th, 14th of June, right? So it'd be so let's see, we got so we got kind of about 2 weeks to it. So it's on the 13th and 14th, a 2-day meeting for the FOMC announcement. So that'll be important. We can cover that on the Sunday, the 11th. Okay, now let's look at a couple charts here. So This is the Dow Jones. Let's refresh this here. So where it stands right now, it's up 42 points or 0.13%. You can see how it did participate on the 26th along with the other markets, but not as much. But overall, it's definitely not performed like the Qs or the S&P 500 just because of the technology element there. So with the S&P, it's up now 10.25% or 0.24 or 10.25 points or 0.24%. It had a move on Thursday, and again, along with NVIDIA's sympathy trade there. And then the follow through on Friday was even more robust than that. And so it did pop up here when the future started trading, and it's pulled back slightly from its high. But you got to note that we're at the highest point that we've been since August of last year. So it's very notable. This is a if this holds and can build, this is a 5-day breakout, 10-day breakout, monthly breakout, yearly breakout. I mean, it's doing it, right? It's not a question of if, it's actually doing it. So let's look at NASDAQ here. And that's been the standout. Already had it cleared the August high, a week and a half ago, and then pulled back for this Wednesday. And then Thursday, the huge gap with the NVIDIA earnings, and then Marvel again, and everything else just really put some gasoline on the fire there. So it's up 53.5 points or 0.37%. And the Russell is kind of been in the same doldrums as the Dow Jones, but it's been in this sideways channel. So, I mean, it's not even doing anything relative to, the highs of the year. I mean, it's got a long way to go. So I'm suspecting that there could be a case here for, a little bit of a move before the Russell rebalancing and possibly a summer rally in small caps that may be surprising. So I'm going to put that on the table. I don't know if it'll happen, but it's just very interestingly discounted. And normally from November 1st to April 30th are the best 6 months of the year. If we go back to November 1st here for small caps, we were way up here. So we kind of had that pre-November rally. I mean, October was good across the board from the October 13th low that we had with the CPI numbers. We had a rally already, and we actually ended in April lower, which is kind of opposite of what it should do. It should be a little bit discounted after the summer, and then it should rally for the 6 months and then starts pulling back, after that. But it's a very interesting situation here. So what the case for small caps would be is, can the consumer feel some more confidence? We had a little improvement in the sentiment numbers, Michigan sentiment on Friday. So can the consumer, retail investors and other investors and even institutional, can they get confident that there's some growth prospects here? And if these mega caps keep running like they are, then you would have a case that some of them could be, really long in the tooth, very overvalued. You could use them as shorts and buy a bunch of the small caps that have that growth potential. So I'm looking forward to that, because that was done a lot with Apple. Apple became the short, and it allowed you to buy a lot of smaller companies. So creating a nice, hedge with Apple against a basket of potentials. And I could see that process repeating itself. So don't be afraid when stuff goes on a tear and bubbles form, and you may think, well, I missed the party, I wasn't invested here, I didn't have exposure there, or I didn't play these spreads right, or whatever. Don't be disillusioned. Push yourself back, look at the big picture, let the market create another distortion, let it create opportunity, let it go first and do something so that you can then step in and participate when you're more educated on what it's doing, and you can see that potential framework there. Okay. Looking at the VIX, it's still above 18. I'm going to be looking at it to get possibly once the debt ceiling thing is officially voted on and all that, I mean, we could drop back down towards 15 or 16 on the VIX. We haven't even hit 15 yet this year. We came to a low of 1690, I think. Or no, low was 1690. So we didn't even hit 15 yet, but I could see it edging down there again. Energy. So crude. So we had that discount mostly on Thursday. The stocks themselves pulled back on Friday, most of the oil stocks, but the oil was up slightly. There's a slope here going on off the bottom. There's a bit of a slope. I could see this being okay. I'm not afraid of oil stocks at this point. I think there's some argument for stability here. Looking at our bonds, of course, that's been a big issue. So we were declining on the bonds, which means they were factoring in a rate hike. And the prospects for the June hike. We did pop up here a little bit. We're up now 1%. So what is this saying? Yields are dropping, bonds are rising. This is kind of a bit of a relief on the debt ceiling thing potentially. That's a 30-year, 10-year, 5-year, 2-year. That was what a slope on that 2-year. It just sliding, sliding away. Okay, sorry for the singing. Okay, gold. Dave, you wanted to talk about gold a little bit? I mean, of course, it's related to the dollar. We saw it pop up the sector ETFs, GDX and GDXJ, senior miners and junior miners are on the calendar for both the end of the month and the beginning of the new month, right?
Yeah, but it still looks like a recent downtrend. It's just popping up for a couple days here. I mean,
again, this all relates to the dollar, so we can't really get a read on this. I mean, copper, you can get. I mean, that's the recession or no recession thing. Gold is a little bit more, when things are really concerning. But the problem is, let's look at the dollar. What did the dollar do here? See, this last week,
rising.
Right? So it was rising and it kind of stabilized. It wasn't declining, and that's what threw off the basic materials and gold the most, and even oil to some degree. So now, if this thing gets kind of resolved, I could see us pulling back with the dollar. So I would be looking for a little bit of mean reversion here, which then could put a little bit more of a floor under basic materials. Going back to our slide, you remember how poorly basic materials has done?
Yeah.
So if you're looking for mean reversion, if you're looking for something that's super discounted so far this year, having a bounce, that might be the area. But again, it's going to be related to what happens here with the dollar. I think that pretty much covers it. Anything else we missed here? Oh, wait, I wanted to show you something here. SMH. Let's put up the monthly chart just so you can get a nice, good picture. Yeah, wow. Well, we had this high here in 2021 and 2022. So this was November, December, and January of 2022. Okay, and it looks like we could end up heading back there. You mentioned we have Avco earnings coming up anyway.
Broadcom, yeah.
Yeah. So we've got some more semis, and we certainly have a fire under the semis at the moment. So I can't see any cold water being splashed on this right away. I would argue that there could be a move up into that former resistance, and then afterwards you might get a bit of a pullback. You could also get a breakout, but that would be much better for an if-then statement. I would let this breathe. I just don't know that I would be stepping short in front of semis at this junction. Let's put in SOX, and that had December and January as well, but not November. It was a little bit lower, so it made a matching high up there. But again, it's got a bit more room to go too, right? So same thing, just different ETF. Got to put up the Marvel here because that's marvelous. Look at that.
Wow.
32%, 32.42. I was thinking it was 35, but I might be wrong. Okay. It could be, I mean, it opened up slightly. Oh, let's change from the close. So the open to close would be slightly less than the close to close. Because it closed literally on its high pretty much here.
Mm-hmm.
Anyway, that's still an outstanding move. Let's bring up NVIDIA here. Yep. So it's a new day. It's a new day. NVIDIA is going to have a market cap bigger than the entire universe pretty soon here. It's almost at $1 trillion, 939 billion. So when NVIDIA is finally worth more than the entire US stock market, probably a good time to short it. All right, we'll end on that. You guys have a good trading week. It is a shortened week, don't forget. It is a shortened week. So you have only 4 days to make hay, right? Just keep that in mind, and also look for this end of month seasonality and first of the month. And I find that a lot of the symbols that are on the seasonality almanac do actually perform in line with what's slated there for these special events like last day of the month, first day of the month, first Friday.
Mm-hmm.
I've been happy with how the almanac has steered us into those. So you can check on the seasonality almanac to see if it is also showing up, let's say, on the RSI2 dashboard, on the %B dashboard, on the performance dashboard. So you can look and see if you see the same symbol come up. That could be a way to line up some ducks. Okay.
All right. Good luck.
All right. Thank you. Take care.
Bye.